14%. Thursday's $25 billion sale followed weak results for 3- and 10-year debt auctions this week. Long ends gains slowed, leaving 30-year yields little changed at around 4.83%. Yield on 10-year bonds climbed 2 basis points to 4.25%, and the dollar barely moved. Whether or not the blistering rally in US stocks is about to cause some large auction clients to prepare for a near-term pullback amid high valuations added to bulls' worries is seasonality. August and September have historically been the two worst months for the S&P 500. Earlier gains in equities were pushed by the de-escalation of geopolitical risks after Russia said that Putin and Trump are finalizing the after stating plans for a 100% on semi.
RGT, 4.47 billion in revenues. They missed the 4.5 billion consensus expectation. Gulf Tango.
What am I looking at here? RKLV's out. What's it doing? Let's see. LV. Up a little bit. Up 2 and change. Yeah. Good old RKLV. See what they had to say.
Goodyear fully adjusted earnings at 17 cents. Be well below the 37-cent consensus. Gulf Tango.
Oh, Goodyear. I thought they were going to beat today. They usually, the earnings flow in that name is usually decent, but doesn't look too decent right now. Oh, it just went green. You never know. You never know. He's not really a big mover, but who knows? You got a couple of it. So Cart up nice, off the highs, but up nice. RKLB, Brahma just called out. They reported that's up. Oh, off the highs there too. You don't know till tomorrow morning with these things. Even then, you don't know exactly. Just like that whatchamacallit today, APP, which was insane. There were quite a few. We were just talking about that. Insane moves out there. Goldman kind of warned about some mispricing in options, being that they were cheap, on both sides. You don't know if they're going to be bullish reactions, but that options were mispriced going into the quarter. And it sure looks that way. TTD pooping itself. Damn, these things. I wonder what the multiple is on TTD these days.
On earnings.
Even names like Team, these things can't get out of their own way. Do they report? That's up a little bit. We'll talk about a few names. I don't have anything major. Just get you guys caught up, especially STEAMROOM members, get you guys caught up on, just in case you were away the week. And then we kind of go into detail on the Sunday webinar. But nothing major to kind of bring to your attention. I guess we'll go through it let me mute this. Hold on. LT. Tesla. Actually, that's funny. I bought some Tesla today. We'll talk about the I bought the TSLL. But caught some action today. All right, so let's go here. Hold on. Let me move some coffee so I don't have a mishap. All right. Welcome, everybody. You got some earnings out there, a little bit of moving around on a few names, a lot of underbelly names this week, and more so today. Twilio, did they report? Names like a Twilio, a couple of software names and stuff like that. So we'll see if anything interesting comes out of this. As you guys already know, a few of you were touching on it. Some of these earnings moves have been insane. The APP today was something to watch. The whole overnight movement was something to watch. Even names, Melly, I saw had a crazy move. Was up, then down, then bounced around. There was some buying there today. Just a lot of movement. And granted, these names are widely known, right? They're big movers. I hate to use the word long in the tooth, but they've already had big moves, a lot of these things. So it's not all that surprising you get this see this volatility. I think some of these moves were priced pretty big. In an APP, what was the implied move on an APP? I'm just curious, going into earnings. Has to be up there, right? Implied wise. I mean, this thing is as big as the mover as there is off a catalyst. So, but you get some big movement off earnings, and I think that's a good point to raise here, right? And I think a lot of people fall in this trap, including myself. But you get into earnings season, the bulk, not all of it, but the bulk of the big moves out there stem from earnings and reaction to earnings, right? And that's something you got to understand, because a lot of people fall into the trap of hoping for a big move in a name that doesn't have that catalyst, and you're not going to get it. Now, at the same time, it always looks easier after the fact, and like an APP. Right? You looked right on the short side. You looked right on the long side before that. Then you ended up being paid on the long side when it was all said and done. Some of these other names, they missed. They got hit over the head. So you get, in other words, what I'm getting at is you have to take that earnings risk, right? You have to pay that price. You're going to have to pay that implied volatility going into the number to get that reward. And obviously you don't get the reward all the time, right? So just something to keep in mind as we see a lot of movement, it stems from earnings. And as we get through this week, you're going to see less and less of that. Okay. And that's also what we talked about in regards to the flow, as well as the price action. There was a lot of call buying going into this quarter, right? Because players are bullish, players are underexposed. You got names like an APP, which is $400. If anyone's taking a shot into earnings, they're not buying the equity, right? So they're likely buying calls. So you're not really getting true buying, right? You're getting hedging, speculation, stock replacement. That's all going to start to calm down a lot now, especially now that this week is coming to an end as we get into next week. You're going to see little by little, each and every day, a gradual improvement, clarity in the flow, right? It's not going to all look the same, which a lot of times earnings flow does all look the same, okay? So that's one important thing to acknowledge here. And that's why, like, when you get what we talked about over the last couple of weeks, as you get into this period of time, again, if you know the moves, right, we can look now and say, oh, Max 7 knocked the cover off the ball. Some of these growth names we like knocked the cover off the ball. Nobody wants to talk about any losers out there. In hindsight, it's easy to say, we should all be long and add to longs going into earnings. But it didn't have to work out that way, right? In net, what I think you're seeing overall in the market and in the true market, as we like to say, right? We're seeing already digestion take fold, okay? Like, and you guys know I like to look at kind of the equal weight S&P 500, especially when we get into these type of times. Not to say that the equal weight has to lead the S&P 500, but it's easy to get mixed signals or to get the wrong impression by looking at the NASDAQ or the S&P 500 that the bulk of the weight is made up by 5-6 names, right? Where underneath the hood, granted, if you trade just those names, if you trade just those indexes, okay, more to you, right? But if you want to get a true read on the whole universe of equities, you can't always look there. And you should be looking elsewhere, right? And a lot of times I like to look at these equal weight ETFs just to see if there actually is some digestion taking place while, earnings in a few names has really carried the indexes here. And that's what we're seeing. Now, yeah, I think that's all good, right? I'm not saying that's a negative, especially earnings net have been strong so far coming out of this quarter, right? So that's all constructive longer term. But what I think is happening right now is we're getting kind of a rolling digestion, right? You heard of like this constant rotation or rolling rotation. You hear the term rolling correction a lot of times. We're getting like a rolling digestion, right? You get some of the worst sectors that sell off first and remain bearish, right? Like we're seeing the industrials, the financials, the small caps, right? And the strong components, which is predominantly AI related and has been, right, forever, they kind of carry the weight while all this is taking place. And then what you're likely going to see is when these things get cooked, right, which a lot of them are there, and we'll talk about that because it's interesting, but when some of these AI pockets get overdone, then you're going to start to see digestion there, right? And possibly some of that money move back into these other areas that have already been digesting their recent rally, okay? So that's what I think we're seeing here. We were going to see something, right? If you remember, rewind a couple of weeks, probably felt a little more cautious for the first time in this rally, okay? Feeling a little bit of uneasiness, if you guys recall, because of kind of the frenzy that was taking place in a lot of the speculative names, right? And you were getting some of the indicators that I look at, like correlation, really got unwound, right? And when I see a lot of these things lining up, it doesn't mean it has to happen right now, but it usually means something's coming sooner than later via either some digestion or a correction, right? But the climate's going to change, I guess is the best way to put it, right? So if you remember, that was kind of the conversation we were having a couple of weeks ago as we were going into earnings season. And the climate has changed now, right? The climate has changed. We got a little bit of a drawdown across the board, okay? And you can barely make it out in kind of like SPX and NASDAQ because of some of the names there. But, right, you still are off highs, even with the nice snapback rally we've had here, okay? And this is what I would refer to as digestion. Now, if you remember, what we talked about last week was more of, while we're trading, while we're getting all wound up in the excitement of earnings and names and all that stuff, which obviously a lot of retail traders are going to do. The more important thing we want to keep an eye on is how this stuff tends to unfold here, right? What does positioning look like while some of this digestion is taking place under the hood, right? What are things like liquidity that's been simply gangbuster? A lot of these liquidity measures we look at, how does this tend to unfold over the next few weeks? In which seasonally, right, as you get into the second half of August, is a different period in time. Right? Seasonally, second half of August is not the best of times. Okay, again, if everybody's looking for that correction in September, right? What's likely to happen is we're going to see more of what we're seeing right now. And by the time September comes around, maybe we get, a drawdown for a week, and that may be it, right? Because it's already happened. Okay, the digestive phase already took place under the hood for a month and a half. So that very well may be the scenario that's at play here. But while that's all taking place, you got a few balls in the air that could, catalysts that could sway one way or the other. Example, you got, the Fed, you got Jackson Hole at the end of the month. You got the Fed meeting in September. The market's pricing in rate cuts. It looks like the Fed's going to cut rates. And, what the market reaction is to that is going to be really interesting. Like, everybody just assumes that the Fed is going to cut rates and you're going to see buying everywhere. I definitely could see an environment where the Fed cuts rates and they sell some of this technology, AI related stuff that they've been buying now and rotate into more economically sensitive, rate sensitive names that have been digesting. Right? So these are the things I think we want to keep an eye on as we get through the first couple weeks of August. And in the meantime, what I think the opportunities are in individual names on a trading basis right now. And not just a trading basis, but just on a case-by-case basis in names, right? Because that's what you're seeing. What you're seeing is you're seeing certain, even sectors, and a lot of times you see this out of earnings, a few names pull back, right? They're in bull trends. They just pull back because they overheated to the upside and find buyers again, right? And that's where these windows of trading opportunities exist, or even longer term, right? If you have names, like I give an example, and I'm not a big fan of it, but I'm just giving an example. You have a name like Apple that really hasn't done a whole lot in a while, right? And some may see this as an opportunity, especially if there is any weakness, showing up in coming weeks, to get long, maybe with some time. Okay. So I think, again, the bottom line is I think names on a case-by-case basis, especially if we're going through this kind of rolling digestion phase the next few weeks, those are the opportunities to look at. I'll give you another example. Kind of a few people in the room on Chero traded this. You had a name like Costco, right? Yeah, one of the hotter stocks for quite a while, and kind of has been digesting. This is Costco digesting right now, okay? And you got this kind of drip to the lower end of the range, catches some sweeper activity, right? Nothing dramatic, just short-term sweepers that are looking for a bounce. Was a nice setup for a bounce play. And, I think a lot of these scenarios we're going to see more of them over the next few weeks as we kind of muddle through this, okay? Because, again, you got to understand, what everybody wants is one or the other. They want to melt up or they want a highly correlated correction, okay? Again, I'm a bull, right? And I don't want the melt up. I want a highly correlated sell-off. I would love that right now, right? But so would a bucket of money on the sidelines that didn't participate fully in this rally. Okay, so when everybody wants that, right? When bulls and bears both want a pullback, it's not that easy. It doesn't come around that easy. And instead, you get what looks like this. Right? Kind of bullish one day. Oh, we might be in correction the next day. And it's kind of more of a choppy grind underneath the hood, look for alpha in names type of market. All right. And as the weeks go on, we'll see, right? As we approach Jackson Hole, as we get into September with the Fed, you don't want to predict how that may shake out. We want to see how things line up going into it. All right. Here's the main risk right now. All right. Because again, what you look at is you want to look at on the positioning sentiment side of things, as we talked about. You want to make sure we're not too crowded here, because that would be the main risk. Some catalyst, wherever it shows up from, you get some selling, and you got a lot of supply now because you got a big portion of the market caught offside. And you don't necessarily have that here, right? But you do have the systematic crowd, right? CTAs, vol control funds. That's where I think the bulk of the risk stems from, right? We talked about this last week. Remember, they're kind of capped out as far as buying is concerned. So that tailwind is gone. You're not getting that buy pressure, and at the same time, they will sell depending on what the index is and volatility does. All right. So this is what they look like. Okay. This is systematic. This is both CTAs, vol controls, and risk parity. Okay. And this is globally. This is globally. The other one was US. All right. So that's the main risk. And what a lot of times happens, unlike what we were talking about off the April lows, where when you get the max short, that's a great buying opportunity. Because what happens is, even if there's further weakness, they're not selling into that weakness anymore. Okay, they're actually, they tend to do buying into that weakness. So a lot of times you see a market at lows selling off and then reversing, right? Because of that bid in the market. When the market's kind of at highs or topping out, it's different in where you don't get kind of that upside down V-shape type of move. You get more of digestion, and then if you get a down leg that cracks levels, that's what sets them off, right? You don't get this, and that leads to systematic fund aggressive selling, right? It can if you get some exogenous event, right? But without that big catalyst, you have more of digestion, right? A digestive phase, and then it can lead to possibly some sort of downdraft. Okay? So again, may not be something to worry about now, right? And that's kind of what we talked about. I think the main takeaway is that it's not bullish anymore, but these are the things we want to see unfold over the next 2, 3 weeks, 4 weeks, and see where all these things are at, right? Where all these things were at. So you don't want to get too predictive here because you're wasting your time. That's the main risk out there. As far as some of the big picture stuff we like to look at, again, it's nothing different than what we were looking at for the last couple of weeks, right? What am I doing here? Let's look at Sharpies quick. I'm trying this method instead of me scrambling to post at the last minute. So here are Sharpies, right? Hedgers in the futures market. This is combined in equity indexes. And this is a simple takeaway, right? If you're concerned about futures positioning being offside, commercial hedgers would be aggressively hedged, right? That's what they do, okay? If the one thing you're trying to get a gauge on is positioning, okay, that's where I love, looking at this stuff, because that's the instant takeaway from that signal. And as you can see, they're net slightly long, okay? Slightly long. Now, depending on what index, they're long here, less long here. But for me, it's irrelevant because overall, okay, the takeaway from this is that positioning is not all sides to be a concern. Okay? And on top of that, if you do get some sort of drawdown, which is certainly possible, market can pull back for a week, right? Without anything major going on. If players get bared up into that, in other words, if players are shorting or scrambling for protection into that weakness, especially via futures, you're likely going to get Sharpies and long exposure into that. Kind of what they did here. And for me, that would be the second big buy signal in this phase off the April lows. All right? So this position, it's actually in good position, right? If you're a bull, the last thing you want to see is that they do this again. They start to put hedges on. Because what that's telling you is the people who weren't involved in this rally are starting to get aggressively long in this rally, right? And ultimately that ends up being the supply that can weigh on things when a market starts to pull back and momentum lead. Okay? So this is still in okay shape. We get another update tomorrow. We'll see how that goes. I mentioned they bought a little VIX, right? But that makes sense considering how low VIX got. Oh, where is it? Is this it? Yeah, this is it. This might be the week prior, but you get the same idea. So you see a little lift here where they took advantage of the pullback in VIX. All right, they got a little bit of a VIX pop here, unwound completely. Again, we get an update tomorrow, but nothing major. So that's still in good shape. Some of the big picture indicators. What else we look at liquidity. This is what liquidity looks like. Right, and so we have a look ahead on liquidity. Okay, so this is looking ahead, right? It's looking into what this is kind of signaling to us is that kind of you get into April, second half of August into September, you possibly can run into some trouble liquidity-wise, right? Again, the start of some trouble is what this is showing. It's not any trouble yet. But you can see recuperated a little. And as of right now, just looks like kind of what? Digestion. All right? Just looks like digestion. Okay? But again, something we want to keep an eye on. All right? Going into the Fed especially. Always want to keep an eye on that. What else? The credit markets. I mean, have you seen, I posted it on my Twitter. Can I pull it up here? Credit spreads are at tight. Right, a little bit of a divergence before we actually got the market pull, but that kind of got wiped out when you got this little pullback here. Again, big picture wise, everything still looks fine. Okay, still looks fine. Let's see this. I'm going to go like this. BBs, will that pull it up? There we go. Here's DB's consolidated equity positioning. All right, we got a little above neutral, but the little pullback that we got and some top, all right, so it's settling in here a little above neutral. So this is ideal, right? This is, again, what we were talking about a couple of weeks ago. At the least, this is what we wanted to see, right? And if this continues, what we're seeing now continues, ultimately, I think that would be the most bullish scenario here to play out. Okay, as opposed to just rally to new highs here and you pretty much got the same names continuing to move. Okay, so again, I want to make the point though, a couple weeks ago, or when we were starting to see some of these signs that the environment would change, I think they were more important than they are now, right? Over the next few weeks, I think we want to see how this shakes out without trying to predict much, which can be something very difficult to resist. And at the same time, I think names are the things to watch now, individual names, right? Now that we got through the heart of earnings season, the flow, the sweeper activity is going to be cleaner in names. Okay. And I think the setups in names also loosened up a bit, right? So if the market does chop, you can find momentum and opportunity in names. Like, let me give you an example. Like the spec frenzy, right? That got us a little bit of concerned. I mean, have you looked at these names now? They've completely cooled off, right? Completely. Like this was the heart of it. Okay. They're done. Right? Whatever specs were chasing open, looking to get rich in a week because the stock is going to go straight up, right? They're done. some of the other names that you guys have traded and made a lot of money with, right? This guy, you had a nice cool. This could even likely hang around here now. Right? Can hang around here now and digest that way. What are some of the other ones I'm saying? These are still the hottest on the street, haven't cooled off that much. But I think some more than others. Let me see. Yeah. All right. Some more than others. Let's see what this animal's doing. Yeah. So as things got overheated, what I think is you're going to see more of this, right? You're going to see things that got overheated, digest, chop around, especially if they have earnings, they react to earnings, and you're going to see money moving around to different areas, right? I mean, nobody talks like Netflix, right? Usually that's the talk of the town coming out of earnings. Nobody's talking about it because whoever bought calls on Netflix into the quarter lost money, and nobody's going to talk about losing money, right? And now it's not ripping higher with everything else, but again, I think healthy cooling off here, right? That's totally normal and healthy after a stock ripped the way it did. Yeah, ONDS, all these, these names, these are some of the hotter names now, right? These are some of the newer names now, like this ONDS just caught fire here now. I'm talking about 3 weeks ago when you had this frenzy and it was taking all of these spec names higher with it, right? I mean, I remember even here's another one. Okay. Like this QS went from 3 to 15. Okay. It's at 9 now. Right. So now I'm not talking about this bouncing around from 9 to 11. If it bounces now from there, right? I'm talking about this thing went from 2 to 15 and retail thinking it's going to go from 15 to 50. All right. If that continues, it ends up becoming not a catastrophe, but a problem for the overall market. But this space predominantly got hosed. It got rinsed, and that's what it needed to do. All right. So again, I'm trying to put in words of this again. I think the opportunities are, trading wise, without a doubt. But even longer term, if you see rotation into names that haven't participated in this recent rip, they may be opportunities over the intermediate term because you may see rotation coming out of these hotter names and going into names like that, right? So for me, again, I'm talking about if they're seeing flow. Like I'm not going to pick names out of my rear end because I don't know if these names are going to see rotation. But if I see a name that's been consolidating, starting to see buying show up, I don't mind buying that with some time. I don't mind buying it with some time. But I think on a trading basis especially, and I know that's where a lot of you live, you got kind of these type of setups where a stock is down off its highs and could see a decent bounce, right, for a trade. And I think we're going to have enough of those over the next few weeks to try to keep us busy in a sense and to get more information to see what some of these overall signals are telling us as we get into the latter part of August. Yeah, I was looking at that, T. I was looking at this today. They report in November. Okay. Now, disclaimer, I played this name a couple of times and I'm kind of disgruntled because I looked to trade it a couple of times. Every time I sold it, that's when it had a little bit of a move. But while I was in it, it did nothing. It literally bored me to death, T. So I'm not the best person to ask in regards to this name, but there was some November buying today. Nothing dramatic, but decent November buying. And the only thing I would say is you have earnings coming up. All right. So it could be tied to that possibly. But I don't mind it. I don't mind it because it looks, it's a almost a laggard AI play thing. You know, it's almost like a laggard AI play. So I don't. Again, if you like it, you had some November action there. You got to bob and weave. You got to get through earnings here. But other than that, fine. Just again, expect a slow name because the majority of this price action is really slow. I played it a couple of times. It was agita. Okay. Like I was telling you guys earlier, what I bought today is Tesla. I bought TSLL. And you guys know how I hate Tesla. Right? You guys know I not hate Tesla. I hate the noise around Tesla. Right? Because again, so many bulls, bears, everyone trying to time it, always headlines around there. I hate it. But there was a sweep today that caught my eye in Tesla. Okay? December calls. Had like fund footprints, as I like to say, around it. Right? This is not somebody just shooting, looking to catch a squeeze in Tesla. This is not somebody playing weeklies in Tesla. Right? They went out to the end of the year and they almost basically bought the stock, like buying the stock. Deep in the money, high delta, good looking sweep. 7 million. All right? Again, not a lot of riffraff, not a lot of people on social media will be talking about it, right? Because it's not that big eye-popping type of action. All right? You have to dig to see it. But again, I'm not buying it as this thing has already ripped. Right? It's kind of been frustrating bulls and bears. So, you know, I look at that as at least a decent spot to start buying the name. So now the way I'm going to play it is, by the way, I played it via TSLF. Okay. So a lot cheaper. So the way I'm going to approach it now is if this December buyer adds, I will add. Or if they come after shorter term strikes aggressively, I'll add some more there as well. You know? So, but, you know, again, the way I'm looking at it is this is not, you know, looks nothing like the market, looks nothing like some of these overheated names, right? These spec names or large cap names. It hasn't participated at all, right? And you can probably put Apple in that camp. You know, the only difference is this is coming on almost like the third day of buying an Apple, right? As you guys know in the Steam Room, Apple has seen some flow of the last few days heat up. But they bought the living daylights out of these November calls. Like 75,000 contracts. 75,000. $30 million of buying. Again, I think both Tesla and Apple, if you've been eyeing these names, right, but the flow hasn't tipped us off to any reason to buy them, you know, especially in Apple now, that's certainly a sign. If we start buying like this in Tesla, I'm definitely adding. Like that's a no-brainer, you know, that's a no-brainer. So, but I think there's enough of these names out there, especially now as we're getting through earnings. We got more post earnings candidates out there, right? And not everything has ripped. Okay, now the stuff that's ripped, they can continue to go, especially if they knock the ball out of the park in earnings. But you know, they become risky. They become risky, not to some major drawdown, just to some consolidation. You know, some consolidation. Okay, and you can understand with these mega caps, they're not under-owned. You know, they see buying for a couple weeks and they go into chop. It's not like it, you know, we're not 5 years ago where we're coming out of a bear market and or a correction, and nobody owns any of these things. They're all owned by now. So I think they're just, they're going to get tired. They're going to get tired. Right? And think about a couple of weeks ago. There was the spec names that were in that boat. Right? Like, look at some. Hey, remember this? I remember this name we both played. You brought it to my attention. OUST. Right? You remember this? You're the one who pointed out to me. You're the reason I bought this thing. Right here, where the circle is. Right? I mean, look at that move. Insane move. Insane. From 10 to 30. Okay, there you go. I mean, I owe you dinner over that play. I mean, this is normal, right? This is normal here. So this is the risk I'm talking about with a lot of stuff that got too hot. This showing up. Okay? The problem with this showing up is, yeah, I know. That was perfect. You played it. You couldn't play it any more perfectly. The problem when this shows up is you don't know how long this digestive phase is going to go on for. You really don't. Okay? The beauty of the flow sometimes is it can help out a little bit. It can help out whether there's still momentum there or it just goes dead. But even with flow, the repeat activity at this point gets really tricky. And what you want to see is this thing digest for a good couple months and then sweepers show up again like they did down here. And that would be your next entry there. But the digestion could take it down to here. Who the hell knows? But that's the risk when these things go like that. That's the risk. So we're looking now, right now, especially as we're getting into these, the tricky period of time seasonally, you want decent risk-reward entries here. Otherwise, in my opinion, you want to stay tactical and you buy off weakness and play for kind of a bounce, right? Because if we remain choppy, you'll get these snapbacks. Another thing too, for like STEAMROOM members, okay? Like you get this, right? Like look at this rinse, by the way. And what this indicator is showing you is that underneath the hood, the pullback or the breather was a lot more than what the major indexes are showing. Right? Remember we were talking about this up over 70 being too hot? Look at this washout to under 10, which you guys in the STEAMROOM know is a clean, full-fledged buy signal. But what it tells you is that underneath the hood, that's where a lot of the correction or digestion is taking place. Yeah, but when you get these buy signals, those are the spots where you're going to find the best entries on a lot of things, especially the market. So we kind of can use that to help us out too, to guide us through. Yeah, I just think it's going to be a trickier next few weeks, a more difficult next few weeks. I think both to the up and down side. It's not going to be easy, but I think on a case-by-case, name-by-name basis, there'll be opportunities out there. Yeah, you played it perfectly. You played that name perfect. Tobias is talking about like this NVTS, which I think reported, right? This is a semi. Again, same thing, Tobias. Like, I just think because of this move, you're going to get more of these up and downs here. But if you still like it, and here off this pole, it's catching action, right? So basically the sweepers are tipping you off to some momentum coming in. Again, I don't see nothing wrong with that for a trade. I don't see anything wrong with that. I just think the runaway rally in this is likely over for now. you're going to get more of this up and down. You're going to get more of this up and down in a lot of these things. You know, if we find some newer names or newer action, you know, that's where probably you get maybe a bigger bang for your buck. Right, so hopefully we see some newer names, right? Some of these rare earth mineral plays that we've been talking about. There's been quite a few of them. You know, we see some new type of names there. You never know where they show up. But I think we focus on names and be more selective, right? But I still think there'll be opportunity there while we try to figure out what the hell this market is going to do, if there's going to be a larger move up or down. Yeah, these are some of the tough parts of the market, right? So this is a cyclical semi, but this is one that's actually doing well. We saw put selling in this name. I think T likes this name with this TER. But, you know, it's been out of favor, right? It's been out of favor. And here, it trades alongside these guys. Like, look. Right? NXPI, even QCOM, you could probably put in that. Oh, you're out. Nice, T. Right? So you see these, even as the semis have done well overall, they have some exposure to AI, but they also have exposure to other global markets, or the auto market. That's been a shit show for them. So that's been weighing on them. Personally, and again, this is more opinion than signal, and I like to stress that because my opinion is just as good as yours, right? But I think if you get the Fed to start cooperating, cutting rates, I think you start to see real buying show up in these things. You know? That's where I think, again, to me, I call that right tail risk. That's where I think the big risk to the market is. It's not some crash. I think it's a full participation rally in this type of stuff that can't get out of its own way. And, you know, it might take the Fed. It may take the Fed. Because you understand, outside of AI right now, there really hasn't been anything. You know, you got these small pockets like space and crypto and all that. But I'm saying economically, there's nothing really to get excited about. There's no growth to get excited about. So it's been predominantly everything AI related. Okay, if you start to get the Fed to cut rates, and now you're starting to get some of the stimulus moving again, right? Because 2022, we went through a tightening cycle because of inflation. You start to get an easing cycle going, you're going to start getting a lot of these names involved. But we're not there yet, right? Now, again, I bought some IWN exposure, as you guys know, right? So I don't mind being early. I'm looking to be early. Maybe I can build a position with some size by being early. Because what happens to me a lot, guys, I don't know. Again, it's a big problem for me. What happens is I'll find something I like, and then it starts moving, and I don't want to chase it. You understand? And I never have enough of it. You know what I mean? I never have enough of it. It ends up a nice little hit, but I couldn't accumulate it. So the only way a lot of times that I can accumulate a position in something is by being early. You know, I can't wait for confirmation because I'll never get my hands on them. So I don't like to do that with everything, right? Especially trades. I don't want to be early on trades. But, you know, sometimes I run into a setup that I like that I'm looking to be early. And by being early, hopefully I can get some exposure in it. Oh, that like here's one T that really is in that camp that you could use rate cuts, but has been doing well here, and the buying's been insane. The CX, now it's overseas, maybe that's why. Mexican. But this is a Mexican cement company. We talked about this, right, on here, guys? I know, T, you know about it. But you had some big buying in this thing. Big buying. Now, again, you get a rate cut cycle going, and, you already got it globally. Like, they're cutting rates across the globe. But you're talking about you can catch a major breakout here. It's just you need to be patient. You need to be patient. Like, this literally has been dead money since 2014. You're going to break out of that? I mean, that's huge. That's huge. But you guys see what I do here. You guys see what I'm referring to? Like, I think there's still longer term setups to take a peek at, right? To take a look at, maybe start to piece into. And I think there's going to be tactical setups to trade as well. I think you need to be more selective here. If the market happens to melt up and run away, okay, even by being selective, you're going to make money. You're just not going to make as much. But at the same time, a melt up is going to lead to a September correction, and probably a vicious one. You understand? So before you know it, you're preparing for that anyway, if you melt up from here. But I think if we continue to digest here, right, at the same time while we're looking for opportunities and names, if we continue to digest here, you may get a week or two of selling, and whatever correction that was could be over. When everybody's thinking about a correction, it could already be over with. Later, T. Right? And that's kind of what you're seeing here. I thought somebody mentioned RSP September protection, and it was heavy today. RSP here. And, it could be a number of things. One obvious one is you got Jackson Hole and you got the Fed meeting. All right? So it makes a lot of sense. Okay? A lot of things, right? The economy can deteriorate a bit, and they feel like the Fed is late, right? The RSP is going to pay the price. Okay? So it could be protection for that. Or it could just be more of this kind of, I guess this, dispersion or bifurcation? What do they call it? You guys know what I'm talking about. Where you get this. NASDAQ up, right? ES was down, but let's say ES up, NASDAQ up, Dow down, Russell down, RSP down, right? Then a couple of days later, the opposite of that's going on. All right? And that's all we've been seeing overall since literally we topped out here. And you know what's interesting to me too? Like, look at Europe, and we'll see what goes on here, right? Because Europe's been one of the strong markets globally. Like, let's say the DAX, you topped out here, right? You couldn't break highs here, and you're literally been digesting since late May. And honestly, this is kind of what I'm referring to. Oh, look at that. I made a small, look at what I did here. You see that? Look at that. This is what I'm talking about. Can easily, like, we could see that in our market here, right? Now, on a chart, the chart doesn't even do it justice, right? Because look, pull back, correction, rally, correction over, breakout, and then this comes, and look at all the up and down here. So something kind of like this wouldn't shock me here. in our market. I think, again, the tricky part of our market is it depends what certain names do on ES. You understand? For what ES will look like. Like, this is more of a truer read on the overall market. Right? And we're seeing something similar to that, right? Since July. The upside niner right here. And this is kind of, right, we were talking about the possibility of a poker face, the possibility of a change in the overall environment. All right, this is where some of those signals were showing up. And that, I think that's what we're seeing right now. You know, some days feel more bullish, other days feel more bearish, right? All depending on earnings. But net, it's just healthy, normal digestion. You know, and we want to see how it resolves. It can resolve in a few different scenarios. I think we need more info. We need more evidence. We need more intel. We need more intel. You know, what was something else that I wanted to show you guys here? Let me see here. Oh, hedge funds, they kind of flip-flop. They're choppy though. They're choppy. Let me see. Hold on one second. There was something. Oh, and like here's breath, right? If you remember, again, when we kind of were a little bit cautious, this was lit up in red. Remember? Lit up in red, painted red all over the place. And depending on what day you look at it, you see different things, right? On a short-term basis. Like, look, there's some green here now in materials and financials. Have you looked at, like, look at the financials? Right? Oh, look, the circle's still up there. Look, upside niner, right? People think this breakout may have legs again, but again, that's where those signals pay dividends, right? The stuff we looked at was signaling that it's a different environment. It's starting to change now. Right? We're not in that breakout environment. And you kind of get it folded here, like, right? Again, nothing dramatic. Right? This is nothing bearish. But you don't want to get sloppy long here. Right? You want to buy off pullback. That's what you want to do. If you're looking to get long, you want to buy off pullback. Okay, and I think we're going to see more of this, right? We're going to see a change, right? Then the financials will bounce for a few days, and you'll lose some of that, oversold and buy stuff there, right? So, like, look, the utilities, they're the hottest group on the street right now. The hottest group. You had two whammies there. You had one, you had the AI data center stuff, right? So think of Chegg. Names like this, the Oklos of the world, right? All those things. VST. Look at it. All right. But also, which was also a plus, utilities are a rate cut play. Like traditionally, when the Fed cuts rates, you want to get long utilities. So some of the older utilities were catching a bit and rallying because rate cuts were getting priced in. And that has led to a lot of red here. A little less red now, but you can see, right? Stretch. This means overheated. Right? New highs is at an extreme. New yearly highs at an extreme. New 4-week highs. Stocks above their 50-day, 97% of them. Stocks above their 200-day, 90% of them. RSI above 70, right? So overheated signal. But, that now with the little break in the market, that's the only thing that's really scorched right now. because of, again, the dispersion we've had. And even there, like, look at this, right? This is one of the leaders in the group, PWR. And I didn't even realize it was down. I saw a headline come across. It's actually cooled off a little bit. So even within sectors, you're starting to see that bifurcation. This is from Sentiment Trader, Alan. This one here. Sentiment Trader is great if you like looking at this stuff. Most of you use Sentiment Trader, but you guys know I'm a big fan of Sentiment Trader. You know, a lot of sentiment stuff, breadth, a lot of stuff on there. What else? What else was there? I could have sworn there was something else I wanted to share with you guys, but couldn't be that important. Yeah, I don't think everything else. Yeah, here's Goldman's like weekly risk sentiment indicators. Right? Then you got some stuff heated, some stuff nowhere near heated. Overall, right? Here's where we were at the lows. Here's where 3 months ago. Here's where we are now. Nothing too drastic. Again, I'm big picture wise. You guys know I'm bullish because I feel like, again, there's not a lot. There hasn't been a lot of participation in this market. This AI bubble continues to inflate, and it's probably got more to go. And investors aren't positioned as you would see at the end of a bubble, you know. But at the same time, while I'm big picture bullish, you know, we felt that way coming off the April lows. We've come a long way here. You know, we've come a long way. And if you look, even the strongest of rallies, you get some gut checks along the way. The longer you go without one, you know, sometimes the more violent it can be. All right? But, you know, like here are the quick ones. Oh, what the hell is that? Like this, look at that prior round. Now, this is coming out of a bear market, so it's different. You don't really want to look at that. Like if you look back through time, you get dips, right? You get dips. Even the strongest of markets, you get dips. You get sideways, you get dips, right? Here's sideways action. Like this is a strong, back what I'm showing here, a strong bull market, all right? And some of the strongest bull markets, you get these rips, and then this is what you get. Like this is what I think we're going through right now. Something similar to that. You know, I think we're going through something similar like that to that. And then if everything goes right, if we get this, okay, we're going to be here going into September when everybody's probably going to be talking about a correction. And at that point, what they're not going to realize is underneath the hood, the market has already corrected. You understand? There are major groups underneath the hood that are already corrected. So what happens is those hot AI names start to cool off, and that's the end of it. And then once they do, you start seeing money rotate into stuff that's already digested. You know? And you can move higher. Like I get it, like what we would rather have, right, is something like this. Okay? Even bulls want this. Because what happens, you get this, okay? You get sentiment positioning all flashing bullish again. You get those correlation signals that I love, all flashing buy signals again. Okay? And then what you're doing is you're just buying here anything that's catching aggressive sweeper activity looking for the big move. Right? Because you've got enough of a flush now that if they catch them offside, you're going to get that big move. But if you don't get that full rinse like we want, they resolve like this. They resolve like that. Look, you see it a lot here. These like just sideways corrections, and that's what it's looking like. Yellow. Now that's what it's looking like right now. But again, the backdrop, for me, the backdrop still looks bullish. Still looks bullish. Now, yeah, that can change, but until that changes, tactically, I want to remain bullish and look for opportunities, just more selective. And, more importantly, longer term, I want to look for opportunities that I can possibly be early and start buying. Worst comes to worst, I add to them. And then when they find momentum, that's where I could get paid. December, let's see. Again, I fall into that trap, Jeremy, a lot, looking at past market price action cycle. I just like to see how things resolve, but they never end up the same. But let's see, 2019. Yeah, so you're probably talking about this here. You're talking about that? Right? You're probably talking about that, which, I definitely, well, here's the thing, okay? If this happens, then this happens. You understand? So if this happens, okay, I just told you I'm bullish, big picture. I will not be adding into this. You understand? Because what's going to happen is, as this occurs, everything I look at for warning signals is going to be flashing warning signals. You understand? So that would be one thing to knock me off my bullish horse, is if this continues, because then I'm worried about this. You understand? But, again, this is a COVID crash. You understand? Oh, you're talking about big bust. Yeah, I don't see it, and I don't see the positioning for that. You understand? Like, look, 2000 and 2007, you're nowhere even close to that type of positioning. Nowhere even close. So maybe if you get what you're looking at here, maybe if this happens, you kind of get a blow off pop. Maybe that's what brings positioning to that. It's certainly possible. But right now, you're not there yet. Right now, you still got a lot of, I hate to use the word fear, but fear. Like, you got a lot of caution out there. Every little dip, Jeremy, and you got people selling and buying puts for Armageddon. Every little dip. Every little dip. And, like, I thought, Jeremy, to your point, the setup for that was going into 2022 for me. I honest to God, and I was wrong. I mean, it was a bear market, but I thought it was what you were talking about. I thought that was it, because into 2022, you had everybody all in you couldn't have a worse setup than you had going into 2022. So I thought this was it. Like, I thought Bitcoin was dead. I thought fart coins and NFTs and all, you'll never see them again. Like, I thought it was the demise of it all. God honest truth. But, you know, what's funny? We never got that recession. That's what probably would have brought it all on, and we never got that recession. So to your point, I thought we were there early 2022. You know, again, bear market, but no bust. You know, no bust. You know, but who knows with these things? You know, you don't know until you're there. Things start cracking. You know, no one. Yeah, you like, again, setup wise, and that's all I can attest to, right? Positioning, sentiment, that type of stuff. You're nowhere at bubble extremes. Nowhere. Now, you can make the argument in certain pockets you're getting there, but not in the overall market. No way. You know, no way. Yeah. Well, that's a good call. So you're talking about Bitcoin cracks and starts to roll over hard. That would be kind of your tip off, right, Jeremy? All right. Because and liquidity usually brings it on, right? Liquidity usually brings it on. Oh, you're talking about blow off rally first. You're talking about, all right? That's what you're talking about? Blow off top. So what? But Jeremy, what you're saying is the blow off is coming. Not that it happened yet, right? Right. So you're talking about blow off top coming. Yeah. I'm saying we're not there yet. That's what I'm saying. So we're not really disagreeing, you know? But I agree with you. You get that kind of melt up, blow off top, you're going to have that type of setup, you know? Margin. You know what I saw interesting? And I don't like to get into the weeds, but even companies themselves aren't levered anywhere near they were levered going into 2000 and 2007. Do you understand? Listen to this, okay? Just think of this. This is all I have to say about it. Because again, when you get into the weeds of macro, it's impossible, guys. There are a lot smarter people out there, more intelligent, more savvy than you and I, that can't figure this shit out. So I wouldn't spend too much time trying to figure this stuff out. But what I would say is this, okay? Do you realize that since 2022, okay, corporate America, companies have been preparing for a recession ever since 2022 that hasn't come? Okay, even though we didn't get a recession, companies have been batting down the hatches, getting ready for a recession, hearing Jamie Dimon talk about a hurricane coming for 3 straight years, and still are in that shape, right? CEO confidence in the toilet. So you have all of corporate America waiting for a recession. They've been waiting for a recession, positioned for a recession. You know, my thing is, what about they let the reins loose now when the Fed starts easing? Then what happens? Yeah, I mean, mild, if that. But you had all of corporate America waiting for this recession to show up that never showed up. right? Layoffs, all this shit, trimming fat, trimming leverage. And the only spot has been AI that really lit up of recent. Again, you had a, even liquidity, right? M2 stuff like that. Just now have been flipping to the positive side. So listen, you could probably make the argument on both ends. I just, again, from what I saw, and I lived and traded through both of them, from the way things looked going into 2000 and 2007, I think you're comparing apples and oranges here. Apples and oranges. And honestly, I think even if the tech bubble was pierced and burst, I think you get a bull market in the rest of the 92% of the S&P 500. So, but the macro guys, do you remember going into 2023 how bearish everybody was? It just, guaranteeing a recession. Nobody can figure out this macro shit. Nobody. Yeah, inverted yield curves, flashing warning signs, right? All these things that used to work. For me, it's plain and simple. How is everybody positioned going into it, right? Now, you get a 2008 rerun, that's a different story, right? If you're playing for a 2008 rerun, good luck to you. That was once in a lifetime. You catch it the second time, you deserve to get paid, okay? But most people have been going broke trying to catch that trade since 2009. I heard it all the way from 2010, 2011, 2012. It's 2025, and people are still talking about it. The tinfoil hat. No, and I get it. You want to look for signs of it, but, don't hold your breath because these things don't come around. Yeah, exactly, Sahil. And I still, like a lot of, outside of AI, you still have a lot of companies that have been conservative. You see it in every sentiment measure. You see it all over the place. They've been trimming fat all over the place. Leverage, corporate America, the leverage is down way off levels you usually see with a market that looks like this. So it's just, again, not the same sentiment positioning that you had into both those bubbles. Yeah, they could be in pockets. Yeah, earnings are still strong. And again, the earnings, you can make the case for the rest outside of tech and AI. They didn't even get started yet. Right? A lot of those earnings have been flatlining forever. You start to get policy loosening up, and then what you're going to start to see, and you don't hear about it as much now, maybe more than we did in April, but all this cut and regulation that Trump has done, all these bullish things that everybody was talking about, you're going to start to see the fruits. Yeah, Stacey, it's a lot leaner out there. It's a lot leaner. Overall, it's a lot leaner. But at the same time, like, again, I've been in this game too long where you can't get into the weeds of this stuff, even me, right? Like being bullish, okay, because the signals have been telling me to be bullish. If those things change, I can't be stubborn because I still feel bullish and ignore what I'm seeing signal-wise. You understand? So to your point, Jeremy, if you get some sort of extension and melt up, and all of a sudden it creates this forced buying that you get to an extreme, you're going to hear me singing a completely different tune. I think once you get, I think they're waiting on the Fed for not just the small caps, but a lot of that stuff. But yeah, me personally, I want to start buying small caps now with the intention of being early so I can build a position in it. You understand? Yeah, because my problem is like you get a breakout in the small caps and then you have to chase, you know what I mean? And then that's where I get uncomfortable. I like kind of being early. I can add to it. Again, I'm not chasing a huge blow off move there, right? This is a serious laggard. It's frustrated enough, folks. The set positioning and sentiment is putrid in the small caps. Nobody wants to own them, So, again, I don't know how early I may be. A lot of people have attempted it and have been extremely early. I just think the setup is cleaner now there. Yeah, I think exactly. We got to expect to be early, right? It's better to expect to be early. And if you're not, that's good. And, well, here's another thing. That's a great point. And I didn't even mention that to Jeremy. Institutions, okay, have not been involved in this market at all. Okay? So, like, into the highs of 2000 and 2007, institutional buying was at an extreme. They literally were all in. All in. Okay? Here today, institutions have been spinning on every rally. Every rally. Like, I wish I had a chart handy here. I think, did I post? Let me see if this one show it. Like, where'd it go? Maybe, oh, here. No, but this only shows recent, right? This only shows recent. But basically, all the buying is from buybacks and retail here and there. Hedge funds, I mean, they're gone. I don't know where they are. Maybe they took the summer off. They've been getting squeezed in some of these smaller cap names that they've been short. They did a little buying recently, but net overall, nothing. And institutions, same thing. I think I have. Wait, hold on. I could. Hold on. Let me see if I could. Here's one measure of institutional leverage here. Okay, you can see them seriously lagging the market. Funding spreads. But I wanted to show you something different. Hold on. I'm not going to be scrolling for days, but let me see if I can dig it up. That's not it. No. Here it is. Okay. So the red line is hedge funds, and the blue line is long-only funds. Okay. They don't even short the blue line. See this blue line? Now, here was the start of 2022. And what you don't see here, it was up here. They started selling late 2021 from here. Anyone like this? Whoop. Okay. So late 2021, you were up here, long only exposure, and has been doing this all the way into 2024, little bit of buying, and that's kind of flatlined here. And that's where long only funds, they don't even short. Okay, but that's long only fund exposure. Now, again, some melt up happens, or 6 months, a year from now, you're telling me the long only fund exposure is up here again? I'm going to be singing a different tune. But here, no interest. So you don't have that supply. You understand? You don't have that selling to hit the market to kind of cascade like 2000. And what's likely to happen, okay, is when you get pullbacks, they become buyers, right? Because they don't have exposure, market pulls back, and they start buying again. But you can see every time they add exposure, look, as soon as there's some weakness, they dump everything they got. And all they've been buying are mega caps, primarily. Yeah, and see, here's the thing, guys. This is all beautiful. This is all great. The one thing that can knock things out of whack is if you get that exogenous event like a COVID. But I think if it happens now, okay, don't get me wrong, you'll see selling, right? If something like a COVID shows up, not like the market's not going to sell off. Of course it is, right? And you're going to see some of these crowded extended names get hit over the head, okay, because everybody looks for exits. But once that runs course, like once that selling is done, you got an unbelievable entry, in my opinion, for where positioning sits now. Because when that selling's done, you're going to have, again, you're going to start at a place where nobody has any exposure to equities. It doesn't take much. The April lows, right? You guys remember, a lot of you, I know, forget about STEAMROOM members, I know you guys know, but a lot of you guys who are just on this webinar, you remember the conversations we were having into those April Liberation Day lows. Okay? Literally, nobody had any long exposure left to equities. Systematic funds were max short. Hedge funds had no long exposure. Right? Long only funds, no long. Nobody had any longs left. Nobody. Usually when these things peak out, everybody's long and they don't want to give up their longs. Like I remember 2000. Oh my, I tell you guys the story all the time. Nobody wanted to sell on the way down. The 97 correction, they did. The 98 correction, they did. Right? Everybody puked it up into those corrections. But 2000, everyone's like, I'm not falling for that shit again. And kept buying and adding and holding and adding all the way down. That's usually the type of positioning and sentiment you get when things blow. They usually don't happen when any little volatility that enters the picture and they're hitting the exit button. That's what you got now. Do you realize, and you throw politics in it, right? Because they play a big part, right? People just don't want to be bullish because Trump is the president. Let's be honest. And I'm not talking about retail. I'm talking about even fund managers, investors across the board. Right? You got literally, now say here, 40% of the country that doesn't want to see the market go higher because Trump is president. And you see that on any sentiment measure you look at. In April, You had consumer sentiment and investment levels that you haven't seen since COVID in 08. You know, and not even just political, that they don't trust Trump. They think, you know, he's crazy. Oh my God, the tariffs, he's going to blow up everything, right? You heard it all in April. Trump is a walking wall of worry. He really is. He's a walking wall of worry. You know, what effed him up the last time is COVID. Let's be honest. But again, when COVID showed up, it was different positioning-wise. It was different. And you still had a V shape when it was all said and done, you know? So anyway, again, we could get, here's seasonality. All right, so we're coming out of this, which was really bullish. And now we're going into August, September, which, you know, tilts bearish. But again, evidence-wise, it looks like we were just looking, right? This is what it looks like right now. You know? And this is more my opinion than anything else. But it looks like, whatchamacallit. Where do we go? We went back. Oh, here. Looks like something like this. Or we went back in here. No, that's not it. Here it is. There it is. Right? So again, I'm just talking price action. You know, it looks something like this right now. And I think that would be constructive. Because like I said, come September, when people really start to talk about seasonality, because that's when shit always happens in September, the bulk of the digestion should be done by then. But you're gonna see it, because some of the hotter names now, the AI names, are going to start to cool off. You understand? They're going to start to come in a bit. Well, I like to, the COT data, which I do follow closely, here's some of the stuff, right? Like, look at April lows, where this was. This was the UMISH stock sentiment. This is 2008. That's the reading we had into the April lows. It doesn't take much. Where's here? This is what I look at. Oh, here, by the way, I don't mean to flip around. Here are hedge funds. Okay, here's the past week. Here's the past month in black. Here's all U.S. equities. And this is ETF indexes. This is single names right here. So right here, you're looking. Hedge fund exposure. Got on Ghoul. Nothing. Okay. Yeah, so Sharpies, that's what I'm referring to. This tells you, I think, everything you need to know about sentiment positioning in the COT data. Where am I going? What? Sharpies are in hedge? Oh, here. Okay. This is not the one, is it? Where are we? What date is this? August 1st. Yeah, this is it. Okay. So this is Sharpie net exposure, commercial hedger net exposure in equity index futures combined. Okay, here's the zero line. All right. So now you see, as the market starts to rally, okay, they were aggressively long as the market bottomed, right? And as the market rallies and as people get more bullish and position more bullish, they take off long exposure and then they start adding hedges as some of that positioning gets crowded to an extreme. Okay? They were aggressively hedged at this point here, took a little bit of it off, the little wiggle there, and then slapped them right back on again into that high. All right? Now that's concerning. Whether the market goes up from there or not, what it tells you is positioning is crowded. Right? Forget about what the market's going to do price action wise. The takeaway is positioning is crowded. That's a problem if momentum shifts. Okay? Here, we get the pullback, the tariff pullback. They go from aggressively long, they take off all their hedges completely and get long. And now we've had this rally, right? Pretty aggressive rally in equities, and they're not even hedged yet. They don't even have a hedge on yet. Right? So it's almost similar to here. Right? You could see they were long, the market started to lift, and then SIVB went bankrupt, and everybody shit their pants. Thought a bank run was coming. Everybody got bearish, but they were already bearish. So when they got bearish, now it's back at an extreme. So what do Sharpies do? Add even more long exposure, which is very uncommon. You understand? So if the market pulls back here, if you get a pullback here for whatever, any news, you get a pullback, and people start getting bearish, you're going to see them step on the gas and add long. And that's even a more bullish signal. You understand? So for me, I don't have to look at any other measure for COT positioning. This is as clean cut as a read as for me as I'm going to want and get. You know, because again, commercial hedgers, their job is to hedge. Okay, they're not YOLOing. They're not looking to YOLO and make money. What they do is when positioning gets to an extreme, okay, likely off extreme price action, that's when they want to be hedged. Because when it tilts, right, they want to make sure they're fully hedged for when the air comes out. Now, their job is to be hedged. The big signal, even more so than being hedged, is when they take those hedges off. Because the only reason they take those hedges off is because everybody else is hedged. You understand? The only time Sharpies are going to take off their hedges is when everybody else is hedged. Because their take is the downside is limited because everybody's already hedged. Right? And that's what they done. That's what they did recently into the liberation correction, lows, whatever they call it. You get the rare occasion where you get a pullback when everybody's already bearish, and that's where it's uncommon, but you get an extreme long position from them, which is very uncommon. Yeah, I mean, this to me, okay, and this was tough. And you guys know I'm a diehard Sharpie fan, okay? But this was a tough signal because they started getting aggressively long here while the Fed was tightening. So it was like the Fed was rigging the game and they were getting long. So my take was, all right, maybe the downside is likely limited, but the upside, because of what the Fed is doing, is limited as well. So it's a tough long there. Okay? That changed when SIVB went down. This, to me, was the bull signal. Because when SIVB went down, what did the Fed have to do? They couldn't tighten anymore. That was the end. They had to implement that banking liquidity program, remember? So now it took the Fed out of the game. Everybody and their mother was short and bearish, and Sharpie stepped on the gas and added long exposure. That was the signal coming out of that. So that's what I'm saying. If we get a pullback now, you may get something similar to that here. And that would be incredible. Yeah, that would be incredible. But again, what it looks like to me, and it's subject to change, is something like this right now that we're going through. You know, and it might not be as clean cut in the S&P, but you'll see it more on the equal weight. You know, the whole universe of stocks weighed equally. All right, so that's the more important thing to keep tabs on now instead of trying to predict what's going to happen 6-9 months out, especially with everything that's going on now. What we want to see is what things look like, how they shake out while we're going through this, right? Are hedge funds and everybody else, are they shorting into that, right? Are there hedges being put onto that? Are people becoming protective, worried about a September correction? If that's the case, that's likely going to be a nice bullish setup. Right? So we want to see how all these things we look at every week shake out while we go through this. And while we do that, and while we're waiting, I think there are things to do in names to keep us busy. You know what I mean? I think there's things to look at in names, especially now, going into next week. Now that earnings are done, it's a great thing. You know, because now the sweeper activity means that much more. You know, 98% of the sweeper activity is useless right now. Useless. Because of all the earnings. Now we got a lot of post-earnings candidates. One more thing I wanted to mention, but I mean, it had earnings, but this was weird. Did you guys see this? Look at this guy. Now, this is a lot of time, though. But I'm interested now. They report. When do they report? Tonight. Let's see here. Anybody know this name by any chance? Oh, man. Get the fuck out of here. This reported tonight. It looks like it's up now, right? Anybody know this stock? Yeah, they reported. But they got a lot of time on these. This guy comes in literally 30 seconds before the bell and sweeps up these March 12.5s. They make metal cards. So you see this? Look, 3:59. It was actually 30 seconds before the bell. And he comes in and sweeps up 400 grand worth of March 12.5 calls, and it looks like some August behind there. And to give you an idea, look. That is 12 times normal volume. That's how unusual that size was. Okay, here's the open interest in the name. So the top OI positions 4,800 September 15 calls. Okay, he comes in and sweeps up 4,000 30 seconds before the close. He's going to get away with this now? You telling me? A senator? What? A senator's brother's on the board? Are you serious, Madden? Joe D'Angelo board shares his bro is a senator. I can't believe this. You talking rat bastard. That's what rat bastard sweep right there. So I'm just, I mean, what is it up? $1.80? I mean, they're out to March. Maybe it's something to look at. That's why I'm asking if you guys know this name. Because somebody wanted these things bad right before the bell. And it's a profitable name. Look. They beat estimates. That's why he probably bought it. Yeah, he bought March, because it's almost like, oh, I got time, but just in case these earnings are going to be good, let me buy some more type of shit. You could see the emotion there. Yeah, well, that's why I'm asking you guys, Madden, if you find something interesting, let us know. Because again, it's up, but in the grand scheme of things, you know what I mean? It's not up huge. They don't care, That's why a lot of times if you don't have earnings and you see a sweep like this, I'm not even thinking I'm buying it, I'm not even thinking. You see a sweep like that, to your point, if somebody's sweeping like that, a name like this with spreads and the liquidity, they know something. You understand? They know something. But this is probably, to Madden's point, who already owns stock and is like, let me just buy some calls. I need more. For whatever reason. Yeah. Want to juice it. Exactly. Well said. Well said, Hank. All right. But yeah, I wanted to mention it to you guys. If you guys we'll ask GJT tomorrow in the room too. If anybody knows anything about this, please share. Because again, profitable name, $15 stock. You could see what would it? So I think you said it's a SPAC or spin-off or something. Like it won't take a lot of buying to get this going. You know what I mean? It don't take a lot of buying to get this thing going. No sellers. No sellers. So we'll revisit tomorrow. Yeah, cart they bought. I like cart too. I made a nice hit in this cart. Here, the circles are there. This cart was a nice one for me. It had a nice flow. Cart. Nice quarter, huh? Nice, man. Time. Yeah, I think a couple of people, a couple members in the Steam room own some of this longer term. I got a little bit. I think I only got like 1,500 shares. I had and I traded it. But I don't have a lot of it. But looks good. I think a couple people in the Steam room like it longer term, they mentioned. Yeah, what is that Maple Bear? It threw me off a couple times when I played it. What's that all about, Maple Bear? That's the name of the company? What the frick is that? I remember when I owned it, I thought I had the wrong symbol. But you got to break out here too, cart. Instacart. Yeah, Instacart. This is a profitable name too. I like this name. I like this cart. I should have left some cart behind from back then. I never did. Just to forget about 1,000 shares or so. CRM's heating up. Did they report yet? They didn't report yet, did they? Heating up in a bad way? Is that what you meant? Yeah, software. Well, different parts of software. Some software has been tough. I think TTV is one of them. But some of the more AI type software has been better. I own that Voyage. I got some stock. Again, longer term hold, but I'm down on it. They had earnings, and there was just a bad reaction to the quarter. Again, some people in the room, Madden had mentioned There was a negative reaction to an AI headline or whatever the case. But again, longer term, if you're in it for that, I think you're fine. This is normal price action in these things. You know, I remember this. Oh, this I bought and I got caught in a little correction. Yeah, if I would have sold it, I would have been talking to myself. See, like here, I bought it here, ended up going lower. You know, but these things, they're just when they're not active, when there's no no trading, they can go all over the place. They're so thin. Here's another one. Remember this? I ended up selling this for a nice winner. This Galaxy, I was down on that. Here, bloop. So again, if you're in it longer term, I would just leave it alone. I would like to add to it if we see action in it. We just saw some Jan buying, not a lot either, but if they come after it, I'll definitely add. Definitely add. But if they don't, I'm just gonna leave what I got, you know. But again, it's not a trade. It's kind of a tuck away type post IPO play. AIRO. I never heard of that. Oh, IPO. Does it trade options? No. Does it? Banksy. I traded this. I made money with this. Banksy. Yeah. Yeah. See, I mean, this just got, this got crazy here. Look at all the Pink Panther and Heat all over the place. So yeah, did they report yet? This could be setting up again. You know, you get finds a low, starts to flatten out. Later, Struck. Have a good night. Starts to flatten out, and then you see some buying stir up again. You know, that's what you want to see. So this is exactly what I'm talking about too, guys. You know, stuff like this that, if we see action in it, could be setting up. Could be setting up. Yeah, TEM tomorrow. Again, what I have TEM, but what I have, I'm holding. Like, listen, for me to be a part of this run and not selling, I'm holding. You know what I mean? I'm holding. Like I gave, look at the give back on that. I gave it all back, but I don't have a lot of it. I have similar to like Voyage. I have some and I leave it alone. Oh, it's Peter Thiel. I remember somebody talking about that on the Banksy. I remember somebody talking about that. MNTN. I don't know what this is. I don't know where you guys find this shit. I don't know where this is. What is it? Should I know what that is? Is this a SPAC? It looks like a SPAC, right? Let me see something. Fundamentals, nothing. Television ushering in a new generation of advertisers, connected TV, software, self-serve advertising platform. And again, for me, who is that? Who is that? Oh, James. Like, unless you catch a sweeper activity, I don't even know about it. So I'm certainly not buying it. Like if this name caught some sweeper activity, I might have an interest. Just because it's new. But I haven't seen anything yet. Yeah, T-Can, I still have this. It's kind of been stuck here, right? This was a nice run too. I probably should have sold that, but whatever. You know, that's why I don't buy too much of it. That's the only way I'm going to leave it alone to try to get that bigger payday, you know? When I got size, it's hard for me to sit. Oh, I got the wrong symbol up. Let me see. Sale. Oh, I think I know this stock. Yeah. Yeah, it looks interesting. Again, if this thing caught sweeper activity here, I like it. You know? I like it kind of gapped up, got a little bit too extended here, and very nice digestion. Right? So if there's sweeper activity that shows up here, that's the type of shit I like. AEO, I contemplated to get in for the squeeze, but I never pulled the trigger. But you got a lot of riffraff activity in it. Speculative activity. Well, the Annette, a few people in the room had some nice profits. They rolled. But this thing, here's where they were buying it, Delgado. They were inhaling November calls here. Inhaling. This was a real nice winner. But Annette's been a stud. Had this little mishap off that quarter, but that ended up being the opportunity there when they started sweeping it up. This is a nice, sexy AI name. Up here, again, this is the type of shit like, I don't know anymore. Oh, I got a little mosquito here that's haunting me. This thing went from 75 to 140 now. So here it gets a lot more tricky. Yeah, there. Sahil is one of them who played those November 10 times. That's better than a sharp stick in the eye. But this is a great stock, and that's a nice growth thing. This had the Apple news today too. They got earnings coming up. But this is also a good name, like Annette. AI play as well. What's the name that's been that saw a lot of flow? That was an AI play nobody was talking about and is really starting to pay. This Corning. Look at this. You guys remember this name when we were talking about the flow? They bought a lot of this Corning. And it was slow. It was a slow stock. And now with the earnings boost, look at that. 65. But a lot of these names look like this now, guys. They look like this. A lot more risk now up here. A lot more risk. Even if they keep going, they get choppier. You get those reversals. ASPN. I don't know this one. Jeez. I don't know this one. This is a crazy looking stock though. Yeah, these stocks that fall out of bed like this, I just, I'm not too savvy with them. Like you had this kind of this type of name, you need to let them settle in a little bit. But they do okay in this S-bet. Once in a while, it catches action, but it's real messy. Once in a blue moon, there's some clean sweeper activity at a nice spot, and you get a trade. You had this set up here, if you remember we were talking about, coming off this low, kind of this floor. And then again, after a sick run, retraced And then you had some flow stir up here too for a nice trade. There's another name that does something similar. I forget the symbol. It's a little pricier, but catches flow. I caught flow recently, I should say. I think they, they do something with Ethereum or some shit. You guys know what I'm talking about? Is it with a B? No. That's a little guy. It's like a $40 stock. Had a nice little pop the last couple of days. They were buying, not BTBT. I know BTBT. That's a little, whatchamacallit. I'm talking about, it's like this S-bet. That's it. Thank you, Madden. See, I had to yell at you a little. That's the one. Here. So this is, they did this. They came in and they were buying this the last few days here. BMNR. I know, Madden. I'm busting your chops. Oh, yeah? I didn't know that. But yeah, you had, let me see if I can dig it up here. Sometimes this doesn't run chronological order. Yeah, see, you had some buying. Let's see, Tom Lee Pump. What's the dates on this? I can't see the dates on these things. Yesterday. Yeah, look, you see, they came in, they bought weeklies. Now, Monday. Here, right? Yeah. This is Monday. Weekly 35s. The stock was 33. Here, look, the Friday. 30 bucks, 30 bucks, 30 and change. Look here. These are them. What's the date here? August 1st. Yeah, I think that was Friday, right? And this was Monday. I can't find the date. But right here, as I circled. Yep. Not fungal. So they were buying kind of this, right? Flat price action and looking for a little pop. I like these setups. Sometimes they wear me out, though. They take a little longer than I hold on to it, right? You get the flat setup here, flat setup, and they start buying it. And then, see, I sell right into that, though. See, like, if I do play them off that, I sell this. Where by right, you should probably roll or leave a piece. Like this S-bet I played, and I sold literally, I think, a day or two. I sold this, and this happened. But I like these plays. Again, you know my logic, right? Quiet, right? Like stock goes quiet, dead, and then all of a sudden some sweeper activity starts to creep in. It's tipping you off to possibly some momentum coming into the name. Those are my favorite type of setups. So yeah, I think we'll have a good amount of these type of things to play around with, no matter what, over the next couple of weeks. And then let's see where we're at in a couple of weeks going into mid-August. And hopefully we'll have some more information. But I'm excited for next week, cleaner flow anyway. That could be a lot more active too. All right, my friends. I've about had it here now. I've run out of saliva. Everybody enjoy the rest of your Thursday evening. I appreciate Jerry. I appreciate you stopping by, spending the afternoon. All right. As always, guys, have a good night. Steam Room members, I will see you mañana. Later, man, and later, see you later, everybody. Have a good night.